Welcome everyone. In this video, we will analyze if XRP coin is ready to explode. Don't forget to subscribe and like, and please watch till the end to understand. If the price breaks this downtrend, it actually has a much bigger meaning for the future of the market. Such a breakout is not only a technical signal for traders, but it can also be a turning point when the overall mood of the market changes. A breakout is usually heavily followed by short-term traders, but long-term traders also pay attention to such events because trend changes can often lead to more permanent and sustainable bullish or bearish moves. A downtrend break usually signals that buyers have broken the pressure on the market. That is, the selling pressure and profit realizations that were previously causing the price to move steadily lower may have slowed down at this point, and buyers may have re-engaged. This could be a strong indication that it's not just a technical shift, but also a psychological transformation of the market. Such breakouts can boost investor confidence and attract new capital flows into the market. If the price successfully makes this breakout, not only short-term gains, but also a long-term recovery could be in store. Such a move usually signals the beginning of a new trend. If the price initially consolidates at a certain level, after this breakout, traders may also see these levels as support, and buying from there could contribute to a further rise in the price. There may also be other technical indicators that suggest more buyers in the market after a downtrend breakout. For example, an increase in trading volume could be a strong indication that the price is moving in support of this breakout. Such indicators provide important signals that buyers are strengthening in the market and that further upside is possible. If such technical indicators also support the breakout, it becomes much more likely that the price will move quickly upwards. A breakout of the downtrend, followed by a further rise in the price, also means that an important psychological level has been breached. Breaching this level can create more confidence among investors and lead to buyers entering the market more aggressively, often thinking if it breaks this level, it will go higher. This could cause prices to gain further momentum, and if it also retests at a downtrend break, it provides a confidence boost. In the Elliott wave theory, every price movement follows a certain structure, and this structure has a cycle with three main waves: the first wave, the second wave, and the third wave. In the current situation, we see that the first and second waves have been completed and preparations are being made for the third wave. This is a very important phase for traders because the third wave usually shows the strongest and fastest movement. This is the part of the market with the most momentum, where prices move upwards faster and stronger. One of the important features of the Elliott wave theory is that each wave reaches a certain target, and the third wave usually marks the beginning of a strong uptrend. In this context, the minimum target set for the third wave is the 1,618 Fibonacci level. This level usually represents an important psychological level that prices can reach with this move. Fibonacci ratios are a frequently used tool for determining the natural planes of market movements, and the 1,618 level is considered a strong resistance or support point by many technical analysts. If prices do indeed move towards this 1,618 level, it could be a major market transformation, both technically and psychologically. When the third wave begins, buyers in the market usually gain more confidence, and this can accelerate price movements. Therefore, the third wave could represent a very important opportunity for traders, and an investment strategy targeting this level could yield positive results. However, it is important to note that a certain path must be followed to achieve this goal. Before the third wave begins, prices need to get strong support from the previous two waves and hold above these levels. If these levels are not broken, the third wave may not reach the expected strength. Therefore, traders should carefully monitor and follow the price movements during the development of the third wave. According to the Elliott wave theory, the third wave is usually longer and stronger than the first two waves. Therefore, it is likely that prices will rise rapidly and traders can make a big profit. If the prices exceed the Fibonacci level of 1,618, then a bigger upward movement may allow new targets to be set, and it is normal for the price to go sideways in the second wave as it is now. Looking at the bigger picture, we can clearly observe that an inverted head and shoulders pattern is currently forming on the chart. Such patterns usually appear at the end of a downtrend and in the final stages of the market before it turns potentially bullish. The Tobo structure usually signals a strong trend reversal and strengthens the probability that the price will rise to a certain level. The market often rebounds quickly after completing such patterns and can reach new highs. Currently, the price is forming the second shoulder of the pattern, and this is an indication that a Tobo is about to be completed. This second shoulder can create a significant shift in the psychology of traders making buyers more dominant. The price action is currently nearing the end of the pattern by making the last shoulder. This kind of structure is one of the strongest signs that the price is ready to make a big bounce from the bottom to the top. When the pattern is completed, the target price signals an increase by the depth of the head zone. The distance from the low to the high of the head zone sets a target for how high the price can go after the completion of the Tobo pattern. This target is an important reference point for traders, as the price will tend to overcome certain resistance levels while trying to reach this level. Such patterns, in particular, can often create uncertainty for traders at first, but once the pattern is completed, the price is likely to accelerate rapidly upwards. Now that the price has reached the completion phase of the pattern, traders can be expected to take bolder steps towards buying. The Tobo pattern often creates a major shift in investor psychology. At first, there are points where the price shows resistance to break out of the downtrend, but with the completion of the pattern, the market psychology changes, and the price action can gain upward momentum faster and stronger. The process of the price completing the shoulder at this level often signals the market's transformation and may cause buyers to start gaining more ground in the market. Such patterns attract a particularly large audience of traders and often lead to an increase in trading volume. As buyers wait for the pattern to complete and the price to rise, selling pressure can be expected to ease. This is because at the end of such patterns, prices are observed to rise rapidly, and buyers may take positions to capitalize on this movement. With the completion of the Tobo pattern, there is a high probability that the price will head towards a target as deep as the depth of the head zone. This could be an important level for traders both in the short term and in the long term. Once the market starts testing this level, both technical analysis and market psychology play a big role in determining where price will head. Traders will want to watch to see if the price will head towards the target and if it can break through this level. And this target is the same as the 1618 target in the Elliott wave. This prominent resistance level on the RSI indicator plays a very important role in market movements, and in the past, we can observe strong price reactions when the price hits this level. Usually, when the RSI approaches this resistance point, prices pull back, considering that overbought conditions exist. This is seen as a signal by traders expecting a potential correction in the market. However, it is important to note that resistances can always be broken, especially if there is strong buying pressure in the market. Currently, the RSI is moving quickly towards this resistance level, and this could be a turning point for price action. If the RSI manages to break through this resistance point, this could allow a bull rally to start in the market. When the RSI breaks this level, it is usually a sign of strong momentum and indicates that buying pressure is increasing. In such a case, traders may buy more, pushing the price upwards, which could result in higher price levels being tested. On the other hand, if the RSI approaches this resistance level and pulls back again, this could signal the start of a selling pressure in the market and the price could fall again. This is because, historically, we have observed that the RSI reacts at these levels and a correction in the market begins. If the RSI bounces back from this resistance, the price is likely to move down again. Another important factor to consider here is the overall trend of the market. If the market is generally in a strong uptrend and the RSI breaks through this resistance level, the price can be expected to move up. However, if the market is generally weak and moving in a downtrend, the RSI may react at this resistance level, causing the price to move down again. Traders should be careful when watching such resistance levels because the RSI should be interpreted not only in isolation, but also in combination with other technical indicators. This resistance level is an important test point that will determine how the price will move. If the RSI retraces from here, the price will surely retrace. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.